Welcome to today's finance series with mitigants-e.g. Today, I'm going to be speaking on credit policy itself, the structuring and the implementation within an organization. Follow me as we go into this round of presentation. Thank you. Credit policy is specific to an organization. It is approved by the management of the organization and it is for a specific purpose, which is really to provide guidance on how credit to be administered within the organization, credit management, the expected credit limits to be given to customers, collections, the mode of collections, approvals required, and the likes. Now, there are certain factors that you need to take into consideration when creating a credit policy manual within your organization. And the very first is the company's purpose and objective, which must be duly aligned within the organization. The second is your customer base. Is it B2B? Is it B2C? The third is the industry in which the company operates in, the geographical spread of the company. So does the company operate locally alone, or does it operate locally and internationally? The next is the target audience. So which segment of your customer base are you trying to target? The next is also the expected documentations that are required, particularly for onboarding new sets of customers. The next is the objective of the credits being considered to be issued to the customer, following which you would now look at how much of this credit you intend to give to your customer. How do you estimate or ascertain the value that will be given to the customer in form of credits? What sort of analysis are you going to do in order to arrive at that? The next is the credits being considered to be issued to the customer. How much of this credit will be issued to the customer, and what is the credit limit that will be given to each customer? Remember that each customer should be treated in isolation. So customer A is customer A, B is B, C is C. The amount of credit given to A might be different from the amount of credit given to B, depending on the volume of the transaction that is carried out within with the organization. So you need to know how much credit you will give to each customer. The next one is the payment terms, which will cover collection of funds from the customer. You need to also look at escalation process, particularly for defaulting customers. You need to also consider if there is any form of customer segmentation within the organization. Now, if you have different segments of customers, your payment terms for each of them might be different depending on the type of customer that you have within the organization. Taking it a step further, we look at bad debt evaluation within the organization, particularly for customers that do not pay as when due, or they've been owing the company for a very long period of time and it's difficult to recover the funds back. You may also want to consider using agents that would help you to recover your money from customers. The next you consider is risk and the mitigants. Risk can be maybe country risk, can be customer risk, can be even the market risk, depending on the nature of a business or transaction that's carried out with the customer. And then there has to be a department responsible for this policy within the organization. You also need to state how often the policy will be reviewed within the organization. I hope this information has been very helpful. If you do not have a credit policy in your organization, endeavor to create one, particularly if you issue credits. However, if you have in your organization, try to look at all the factors or the points that we've raised today and evaluate, do you have them? Are there factors you need to include? Are there things you need to modify or revise within your system? Thank you so much for your time. Thank you for listening and have a great one.